everyone. Good evening. Today is the June 7th. We're recording for the week of June 3rd. Savjit Chatterjee and Rohan Singh. This is our Charts Are Fun weekly session. A lot of things have happened this week. In particular, the market started off with kind of fears for slowing economy. We know that the JOLTS data was weak, 8.06 million job openings versus the 8.36 million the month before. And there was also ISM data. ISM manufacturing data fell below 50. 50 is a key marker of growth, and it was at less than 50 at 48.7% in May. This contrasts to 50.3 and 49.2 in the previous months. So yes, there has been kind of sequential slowdown in manufacturing, and we see across the world rate cuts have begun. So we see that the ECB cut rates this week, 25 basis points, and so did Bank of Canada. So there's expectation that perhaps Fed is next in line to cut rates. Of course, not in the meeting next week. We do have Fed meeting next Tuesday and Wednesday. So we will have Chair Powell do his press release next Wednesday. But maybe perhaps July was at the market, the optimistic folks who were really looking for a rate cut were hoping that would have happened. But today, the non-farm payrolls came out significantly stronger than expected. Market was expecting 182,000 jobs, turned out to have added 272,000 jobs, almost 90,000 more than expected. Private sector jobs was also quite strong at 229,000 job growth versus 165K expected. And this is quite a big increase relative to the April jobs payroll at 175,000. So almost 100K more in May versus April. The average hourly earnings was also quite strong, up 0.4% month over month, though the unemployment rate has been creeping higher, went up to 4% from 3.9. So there is, as a result of the strong jobs data, the expectation for a September rate cut now, which was at 71% recently, has now come down to less than 40%. So now there is less expectation of a second rate cut. Market is back to thinking that there's perhaps one rate cut. Of course, what did cause a big movement today was the 10-year yield. The 10-year yield, because of the weak economy data, where the market started thinking weak is bad, data for the market is bad for the bonds. As a result, the yields were coming down, indicating some kind of expectation that the economy would be slowing. That turned around today. The 10-year yield had a big jump. So with that, let's just go to the charts and talking about the agenda today. The key is we will discuss the markets. As usual, we'll talk about the core ETFs. We'll talk about these sectors. And then from there, we'll move on and talk about the 10-year yield, a key parameter chart that I follow to see where and how it traded this week. And I will then talk about three key story stocks have been in the news, very relevant for next week. One is, of course, the big GameStop, call it the meme mania, continues. 275 million shares traded today. So we'll look at that chart, look at what happened with the video YouTube streaming from the Keith Gill, the key meme trader. He came in. So he tweeted after almost 3-year hiatus in early May, and today he YouTube streamed after 3 years. So it was quite interesting how the market followed with a bated breath. And today was also the day when GameStop announced its earnings, but we'll talk more about it. So that's GameStop. Then we'll also talk about the Apple. Apple's WWDC kicks off next Monday. So end of the day on 4 o'clock, you'll hear from Apple CEO Tim Cook about planned launches on the AI front in the Worldwide Developer Conference. So that's looking at the Apple stock and where it could be headed. And then finally, we'll talk about NVIDIA, because NVIDIA has been huge in the news, doing extremely well after earnings, has jumped up massively from near 950 to as high as 1250, 1260 this week. How much more upside do we have for NVIDIA? We know that their CEO, Jensen Huang, was at the big conference in Taiwan, where he talked about not just their Blackwell chip that's coming out this year. He talked about the chip that comes out the following year. So there is just tremendous amount of, call it, positive news coming out from NVIDIA. So we'll look at the NVIDIA stock as well. So with that, let me share my screen and start talking about the charts. So point you to our blog site, chartsarefun.substack.com. We try to publish blogs daily, Monday through Friday. Just posted about GameStop. I'd encourage you to check it out. You can just subscribe to it with your email. It's free. And as soon as the blog goes out, you'll get an email with the blog right within your email, so you don't have to go to the website to check it out. So GameStop was the blog that published today. Talked about Apple with the expected movement from the WWDC next week. Tesla, interesting enough, had some bullishness in their chart. Talked about that. Potentially Tesla's breakout could take it almost as high as 260 on the technical chart pattern. Talked about Warren Buffett's big investment in Occidental Petroleum, and also there was a very strong earnings from Gap. Talked about where that chart could be headed. Also, our point you to our let me just make sure. Point you to our YouTube channel, Charts Are Fun. This is where this video, for example, will be posted as soon as we record our weekly sessions. It's at Charts Are Fun is a channel. We request you to please subscribe to it. And then also whenever possible, if you like the video, if you could please hit the like button, that does help us share the video with a wider audience. So with that, let me talk about what happened in the market. I walked through the for ETFs, index ETFs. And the way we sort this out is using a rate of change over 5 days, which means it tells us over the week what ETF did the best. So the best ETF, best performing ETF this week among the indexes was the QQQ, the NASDAQ 100. That went up, as we can see, 2.72% right here. We can see for the 5 days of trading, last Friday, we kind of had a nice hammer candle. And from there, it opened up higher this week on Monday and continued its climb. The last couple of days, there was a bit of a pullback. But overall, we closed up 2.7 to the best performing index ETF. The Grayscale Bitcoin ETF, Bitcoin had a reasonably good bid earlier in the week, testing 72 around that region. And last couple of days, it did see a bit of a pullback. Today, down 1.77. But for the week, the Bitcoin, this is the biggest Bitcoin ETF. There are about 9 others that got released in January, but this is the oldest and the most popular Bitcoin ETF, GBTC. So I use that as a proxy for Bitcoin, was up 2.36%. 10-year treasuries, because the bond market in particular was seeing lower yields. The 10-year yield had, in fact, over the last couple of weeks from 4.73 come down all the way down to 4.3, tested just below 4.3 to 4.28. Today, of course, TLT took a hit, down 1.8%, but for the week, it was up 1.5%. Today's hit was the fact that the 10-year yield jumped up quite a bit. S&P 500 was up 1.25% for the week. Also, a similar looking chart as QQQ, just that hasn't gone up as much as QQQ. First 3 days, decent climb, and then a couple of days of shallow pullback at lower volume. So not as much volume in the pullback, but shallow pullback the last couple of days. The emerging market MSCI ETF EM had 3 strong days and then a slight pullback today, but still up to 0.6%, 6-7% for the week. The dollar ETF had a 0.37% gain. A biggest climb was actually today. It's very correlated with yields. When 10-year yield goes up, the dollar goes up with it. So no wonder we had a 0.84%, almost 1% rally in the dollar, and for the overall week, because it has been kind of downward trending for the rest of the week, but after the climb today, it took up the dollar for 0.37% for the week. The Dow Jones Industrial Index Diamond, DIA, that ETF was at 0.24%, mostly up for the week. As we can see, it was climbing most of the way today. It had a reversal doji candle where we can see that it left a long tail on the top and then kind of tested the 20-day moving average in blue, but reversed and closed towards where it opened. So this is kind of a doji reversal candle. We had a doji reversal candle on SPY today as well, as you can see, with a long tail on the top, coming and closing where it opened towards the bottom of the range. And in a similar way, a doji reversal candle on the QQQ. Gold and silver actually took a very bad hit today. Gold was actually down 3.55%. Overall, brought it down for the week at minus 1.7%. Small caps also had a bad day, down 1.13%. When yield goes up, because the small cap companies tend to be like weaker balance sheets, they tend to raise cash for their growth. They tend to get impacted whenever bonds sell off or when yields go up. And today, because of rising yields, small caps took a hit. They were also down quite a bit over the week, down 2.21%. Silver down 4% almost, got a big hit today with a gap down. We can see here down 6.6%. Silver and gold has been quite volatile, both up and down, as you can see, a parabolic climb and a pullback, parabolic climb and a pullback. But what's interesting is gold shows a double top around the 225. The initial measured target on the weekly chart was near 235. It didn't quite meet it yet. It actually broke down from a double top near 225, broke down below the previous lows near 212, lows very close to that near 211, 210. And this could turn out to be an M-shaped double top. In a similar way, we can see an M-shaped double top in silver. So the 29.5 was where silver tested twice, towards May 21st and then towards late May, and then broke down from it. And as you can see, it kind of broke below the low of the M, and now it is headed closer towards the key support near 26. And we can see that the 50-day moving average is near 26 as well. That's rising. So that could turn out to be a support. We've got to see if that acts as support and silver can take a rebound from it. VIX turns out to have kind of formed a cup and a handle. Here is a cup around the 14.5, 15 level. Pulled back this week to kind of form a handle, was down 5.4% for the week, but it kind of closed near the 12 handle, 12.22. If VIX can, from this cup and handle breakout above the 14.5, we're talking about from 11 to 14, 3 points. Some of the 17 to 18 levels where VIX can climb if the market does see a pullback based on, what the Fed does. FOMC is a key decision everyone's watching next week. With that, let's look at the sectors. The best performing sector was the technology, XLK, up 2.59%. Whenever NVIDIA leads the market higher, of course, QQQ XLK does great, and semis and NVIDIA has done really well. Also, we know that there was a big pullback in software stocks last week, but turned out Salesforce, that pullback from 212, had a very fast rebound from it and started reclaiming some of those losses pretty quickly. And software stocks actually did quite well this week, and I think the ETF for the software sector did quite well. And of course, Microsoft, the overall software industry has been doing quite well. And in particular, CrowdStrike had a great week after earnings and kind of put on positive momentum on the software stocks. Healthcare was the next key sector doing well for the week, up 1.89%. We can see a solid climb all the way from the last Thursday, Friday, for 7 consecutive trading days. XLV has been climbing, testing the previous highs near 147. XLK is up to the same level as from what it had towards the week of the May 20th, near the 216, 217 level. It's testing that. We need to see if this is a double top and we get a pullback, or do we continue the climb past it. Communication services had a strong move till the point that it kind of broke down, and we can see this reversal candle today at down 0.69%, but for the week was up 1.36% because towards the Monday, Tuesday, Wednesday, and Thursday it did climb quite a bit. Discretionary, that's where a lot of the Tesla and some of the core Amazon and the other retail stocks are. It actually had a decent week, up 0.95%. However, today it was down with kind of a doji reversal candle as well. XLP, the staple, that has been kind of up 0.44% this week, but took a hit today, down a slight 0.48%. Real estate does not like higher interest rates. The fact that rates shot up today, real estate kind of sold off. XLRE at minus 0.81%, and also down for the week at only 0.2%. It was down for the week. Financials did not do well, down 0.41. Industrials was also poor at 0.96. Basic materials, that's where the precious metals are, gold and silver, having got hit this bad, having formed double tops. No wonder XLB of course, this is where steel, copper, and other basic material miners are as well, had a minus 1.9%. The two weakest performings were actually energy and utilities. Not too far back, we were thinking that, wow, look at all the AI climb, because all these insatiable needs of energy for the data centers, for all the NVIDIA GPUs, the utility companies have been going to the roof. However, it kind of formed a double top near the 72 level. It's been down for the week, down 3.8%. So this was the worst performing sector, industry sector this week. And right following it was energy at 3.42%. Energy kind of did see a kind of a sell off for the not just this week, but it's been a downward trending steadily. While everyone else is lower left to upper right climbing, energy was just the reverse. From the early part of May has been declining, where XLE was almost above 98, 99, came down to below 90. It managed to close above 90, just above 90, but overall we can see that it has been weak for the last entire month. So utilities, bottom left to top right, however, kind of a double top, getting ready for a pullback. To close below the 20-day moving average, headed towards the red, which is the 50-day moving average. Basic materials kind of had a decline since the last 3 weeks, on a downward trend. We see industrials kind of, we had initially thought could have done a cup and handle from 120 to 126, but no, it turned out to be a double top at 126, definitely declining. We can see the 20-day now has curved below, so bearishly set up to continue its declining path on the industrials. Financials kind of are also hanging out between the 50 and the 20-day moving average, but we got to see if it breaks below the 40 level, it could also be on a declining path. Industrials, we already talked about. Discretionary XLY, we can notice the 20 is just trying to take above the 50. So we'll see how Tesla, Amazon, and others perform, but this right now is looking decently okay. It has to break above 180 though. If it can break 180, then we are talking about a move much higher towards the 192 level, because from 168 to 180, that's 12 points. Add that to 180, that could go to 192. Communication looks strong. The blue, the 20-day moving above the 50-day, both climbing. Kind of a breakout from, I could say, a cup and handle between somewhere near 77 to 83. So that's about 6 points. 6 points to 83 is 89. It kind of touched 85 today and pulled back, but it could perhaps continue. So the internet sectors where the communication services are, if Google and Meta and so on do well, this could have continued climb towards that, 89, 90 level. Healthcare has been strong, but we have to look out for this double top here. Today it did kind of have a long tail, kind of a bit of a reversal. If this 147 is a double top, we got to watch out and see if that can then come down. And technology in a similar way, looking for, depending on how Apple and NVIDIA, the two largest. Interesting enough, this week was call it the $3 trillion club. We know that Microsoft is the topmost at close to 3.15 trillion. Apple and NVIDIA both came neck to neck at 3 trillion. NVIDIA took out Apple yesterday, kind of taking out right above the 3 trillion mark at just about 3.01 or so. But they're going to kind of duke it out, these top three in the 3 trillion club, who leads who. But right now, if Apple's WWDC is strong and Apple can muster a breakout above 200 next week, that would be a magic momentum, and that would perhaps take Apple way above the other two. But if turns out that Apple kind of pulls back, and so does NVIDIA, so does Microsoft, we got to see how these three play out in that $3 trillion club. So with that, I do want to go and talk about the 10-year yield. I've been watching this. This is a key barometer for the market. Higher interest rates are not good for the market. So if it turns out that we get a potential breakout of the 10-year yield. And here, the breakout I'm talking about is the potential cup and handle from 4.7 down to 3.78, back to the 4.7, bit of handle pull back to 4.3, tested it in a double bottom fashion, 4.31 to 4.28. If we can today, and today we had a big move, right? From near the 4.3, we went up to 4.43. That's 13 basis points, a very big 3.5% move in the 10-year yield. If the 10-year yield can break 4.7, that's a solid 5.6% is the measured target, and that would not be good for the market. It could definitely have a jitter in the market. So I am watching this 10-year yield chart. I have an ascending triangle pattern. The ascending triangle pattern, however, measures only to 4.92% based on the top here, the horizontal line here, 4.35, the bottom with a, climbing set of bottoms from 3.78 to 41.83, 4.18. So that's an ascending triangle, and that's 4.92. We didn't quite get there. We also have an island cluster here with a gap somewhere right around 4.78. So we have not closed out the gap because we only went as high as 4.73. But we'll have to watch the 10-year yield. If Powell and the FOMC next week is not as dovish as the market wants them to be, market is anxious for a rate cut. Market feels it's going to be key for the real estate, for the consumer sentiment. There's been some slowdown in the consumers worried about higher interest rates, and there's going to be a lot of resets of the commercial real estates. That's going to impact the market quite a bit. So with that, if the FOMC remains concerned about inflationary, and with that we'll know because CPI is going to come out next Tuesday. FOMC will watch the CPI data and then from there maybe use it partially into the decision on Wednesday. But if CPI is tame, then maybe that could keep the Fed to be a bit dovish. But if CPI remains kind of high and hot like it has been in the first few months, it could kind of keep the Fed in careful or kind of a hawkish tone, and that would not be good for the market. I can expect some bit of a pullback. So this is the barometer chart that I've been following to understand where it could be headed. So with that, now I'm going to break and talk about some theme stocks or some story stocks. Today, there was, as I said early on, GameStop's earnings came out. They missed their numbers, and that did hit the stock quite a bit. But what has been going on in GameStop, what woke up the stock literally, was the tweet from this guy, Keith. He basically, Keith Gill is his name. He started tweeting after almost 3 years in May 13th. And then almost a month later, today, he went onto his YouTube channel, which is also just as popular as his Twitter feed, and did this at right around noon, timed this streaming event after the earnings. And he basically shared his confidence. He, in fact, showed his E-Trade portfolio. If I kind of scroll through here, I can see, he, by the way, showed this triangle pattern on the chart, which in many ways is also a bullish flag. We have the flagpole here, then a kind of the flag right here, and that breakout, I'll talk more from the technical analysis on Elliott wave analysis, measures as high as 204. So he said that, look, this is a very bullish breakout, and no wonder after he saw the breakout, he invested a big chunk of his money. And he actually shared his E-Trade account. Let me see if I can find the part where he did share that. And here we go. So this is where he shared his E-Trade account, and you can see that he bought 5 million shares of GameStop at or something around 21 bucks, 21.27 or something. And then he also invested 120,000 call options, much shorter time frame. This shares he can hold as long as he wants, but the call options expired June 21st at $20 strike. He's already in the money. Look at the paper gains, almost 54 million on his stock holdings and close to 90 million plus on his options holdings. So he's already up in the money, but he's not planning to sell it. Options, of course, he'll have to sell it by the time it expires and book his profits if it still continues staying above. He didn't pay a lot of money to buy those options. So if that, if this stays above that, he could effectively, he's paid, I think, what, $5 at the 20 strikes. If it stays above 25, he does extremely well and he makes money on these 120,000 call options. So he basically did point to saying that he intends to hold this and he expects very bullish outcomes, and he has the confidence in Ryan Cohen, the CEO of GameStop. Just to understand Ryan Cohen, he comes from Chewy. 2011, he founded Chewy. He made billions. He became a billionaire out of that. And then he invested his personal money into GameStop in 2019, influenced the board to make him the CEO, and he recently has raised cash. He sold GameStop shares in the May run-up, and then today announced another intent to sell more shares of GameStop. He's planning to raise close to $2 billion of cash in the balance sheet for GameStop. They don't have much or any debt. The question is, what is he going to do with the money? Is he going to invest it in particular ways, like the CEO of MicroStrategy, who has taken their balance sheet and invested in Bitcoins, or is he going to do something else? He's going to take a business proposition of all the retail locations of GameStop and start selling something else that's in conjunction with the video games, like some interesting form of product that he may start selling that may suddenly be very popular and start bringing his company back doing very well. Today's company's earnings kind of missed targets. The expectation was about 1.2 billion of revenue for the quarter. They were significantly short in the 870 million or so, and they did narrow down their. So he has since taken over, Ryan Cohen made the company significantly work on the cash flow. So he has worked towards reducing their losses, and that's something that's good for the company from a fundamental perspective. So if we look at the chart of GameStop from what happened today, we can see that it opened because of poor earnings. It closed near 48 yesterday or 46, took a $10 hit. The first 5 minutes, these are 5-minute candles. Within the first 5 minutes, it fell down to $36. So 36 rebounded within the next 3 candles, like 5, 10, 15 minutes, it hit 48. So that showed just the meme, and there's been constant halt because of the volatility in the stock today. The stock exchange keeps halting it, opens it up, halts it, opens it up. But in that 15 minutes from 36 it went to 48, started selling off again. Right around the 12 time frame is when the Keith Gill came on. He came a little late, but then from there, after he came, it did shoot up from 31 to 38. So this is part, he came like almost 15, 20 minutes late, but from there it did shoot up from 31 to 38. However, it closed towards the lows of the day, but with positive divergence. You can notice that from 48 to 26, RSI did print kind of a higher low. We can see that MACD has been climbing, and volume kind of died down towards the end. The bigger part of that selling happened at the open and then towards the 12 o'clock time frame, when basically he was kind of doing his streaming. But let's look at a little longer term time frame of GameStop, in this case from the 5-minute chart to the daily chart. What we see here is if we take the highs and join it and take the lows and join it, we see in some ways something called the symmetric triangle, where the symmetric triangle, if it breaks out above the 46 level, could go as high as 120, which will challenge the previous highs from back in 2021. So that's a measured move on just the daily chart. Of course, today was a bearish looking candle, big reversal, tail on the top, started around 36, or 37, that's where it opened at, closed near 28, and the lows were 26.12. However, it did rebound right at the trend line from the lows if you join over the last 2 weeks, right? 17.7, 20.1, 26. If you join that, that's where it closed above. It tested it and then closed above. So there's a possibility there might be some downside to close this gap near 24, but there's a very good chance if Ryan Cohen, by the way, does not do investor calls. So there was no investor call, which is very rare after earnings. As a result, not too many analysts covered the stock. There are only 2 analysts that covered the stock, GameStop. So he didn't have an earnings call today, but if anything comes out as an indication of what he plans to do with the cash, there's a good chance that this stock can really absolutely fly. It's a low float stock. It gets a lot of volatility, a lot of shorts on it. That helps power and fuel the rise, something to look at. Now, long term, if you look at call it the monthly chart, every candle here is a month. This is a classic wave 1 climb from 0.78 to 120.75. So if that's wave 1, it's also call it the kind of, if you're looking at a bullish flag, that's the flagpole. And then a bullish flag formed in the wave 2 decline from 120.75 to the lows in April of this year at 9.95. So from here, we broke out. If you draw a triangle to the tops and to the bottoms, that's the bullish flag, and that's the same triangle that Keith showed in his streaming video today. So it's a bullish breakout on heavy volume. Volume had kind of almost come to negligible when it was declining. So wave 1, wave 2 completed. Now wave 3 has just begun. Classic Fibonacci measurements of wave 3 is typically 1.61 times wave 1. So wave 1 is about $120. 1.61 of that added to the breakout point from where it broke out. It's somewhere the lows is near 9.75 is wave 2's low. So take 9.75 and add that, you get a measured target near 204. So that's what we're watching. RSI has begun to climb. MAC or PPO has just crossed the zero line, and now it's just the first print of PPO histogram above the zero line. So the months of this rally could continue for it to take a climb, break above 120, and run to 204. So I am actually quite bullish on GameStop. Understand the meme mania, understand the unpredictable part of it. Fundamentally, can't rule out the company's explosive growth, though. The kinds of cash he has raised with his entrepreneurial kind of skills, having done extremely well with Chewy, if he turns around some form of an investment with the cash in a way that shows multiplicative returns, I could not be surprised to see the stock head towards 204. But it's extremely speculative, not for the faint of heart. I would be very cautious. Even if you do take a position, take a small position, a very small percent of your portfolio, not worth the risk in taking a big risk on the stock. Now from GameStop, I'm going to start talking about Apple because Apple's WWDC conference next week. The hourly chart of Apple shows what we call as an ascending triangle pattern, similar to what we saw with the 10-year yield chart. 192.8 to 193, that's the horizontal line. Resistance level, multiple times it tested and pulled back. But the lows, if I start joining a line through it, that's ascending. That's why it's an ascending triangle, is because the line to the lows is climbing. That breakout measures to 199.38. So that's where Apple's measured target is. It closed near highs of the week, near 197. So we got to see what happens with the WWDC event. Tim Cook comes into the conference and presents his keynote after the market closes on Monday. So after 4 o'clock, wait and see what Apple does. So next week, Tuesday onwards, it's worth watching to see what Apple stock does after the WWDC event. Now, taking a slightly longer term view on the chart, before I go to the monthly chart, I'd actually like to show the weekly chart. The weekly chart, every candle here is a week, does, for the bears who want to see Apple come down, have a potential head and shoulder looking top. Why? The left shoulder from 167 level went to 197, pulled back to the 166.96 or 167, went and defined a head at 199, pulled back again to that 163, 165 level. The right shoulder now could be potentially forming right near the 197. We closed at 196.94 was the high of this week, very close to the 197. So if any disappointment, it could be sell the news, buy the rumor, sell the news. If it turns out that the WWDC keynote and the product announcements are not as wowing as the market expects, this could turn out to be a head and shoulder breakdown, and a breakdown below 165 could take it significantly lower towards the 130s. So that's something. And then we have corroborate with the head and shoulder pattern is potentially the negative divergence where RSI is printing lower highs. That said, we have had negative divergence in the past, and then Apple still broke out, right? Till here, when Apple was hovering in the 127 to 180, we did have negative divergence to the point when it broke 180 and climbed higher to higher highs. So that can easily be happening. If we break 200 next week on very bullish, whatever they do to Siri, they're of course collaborating both with OpenAI and Google. They could announce an interesting product that does a lot more smarter things to Siri than what Siri does today. If you look at what Siri does today, people use it only for asking the time, the weather, not much really. But if people start using Siri for workflows, for asking it to call an Uber for you, for asking it to do stuff that you normally don't do, you get on the phone with your device on the screen and use the screen to type in your request or use the app to do it. If you can do speech activated day-to-day tasks, that can be big, and that could mean a very intelligent conversation that Apple customers can have with the Siri. It could have a huge potential. And Dan Ives looks at Apple and predicts a target. His worst case is 250. His base case is 275, and his best case is 300. Why? His reasoning is that there are 240 million phones that have not been upgraded in 4 years. And the upgrade cycle will be needed because to get this new AI onto the devices, you got to have an iOS 18, you got to get this iPhone 16 coming out this year. So if the AI launches next week, creates a pent-up demand and appetite for people to want that device to upgrade, it could effectively help Apple have a very good year next year with the upgrade cycle. Also, imagine the number of people in the world who will be touched by their AI. They're talking about 2.2 billion active devices. That's what Tim Cook said around the February timeframe, that they have 2.2 billion active Apple devices in the world. If they have Apple's AI across through their iOS into all those devices, imagine what percent of the world, more than 30% of the world, will effectively be experiencing their AI with their technology, with their products. So that's outstanding. So if that happens, that's when you can have the bullish forecast of this cup and handle. If you look at the cup and handle on the monthly chart, it's kind of a slanting cup, slanting towards the right. So the lower left brim is 180, right brim is 199, and the low is somewhere near, say, the 120.32 level or so. So if we break out from that level, that measured target is closer to 275, which is what Dan Ives' target is. PPO is preparing for a bullish cross, is just black line is about to go above the red line, and we can see that the histogram is about to cross the zero line and shoot hard. So that's positive. Accumulation distribution has been strong as ever, staying towards the top, steadily there. Apple has been outperforming the S&P over the last 12 years, up almost 3.8x, 3.8 multiplier x in terms of its relative performance to S&P 500. However, the concern and the caveat is this negative divergence. The RSIs are printing lower highs, but that could get negated as it has in the past, like it has happened here, negated as RSI climbs to higher high. It's possible. As soon as it breaks 200 with strong volume, this RSI negative divergence could be negated. So something to be thinking about. Next week is a key week. Watch if Apple, to recap, breaks down from this head and shoulder, doesn't even make to 199, 197 right shoulder and breaks down, or it kind of breaks 200 and starts moving towards the 275 target. Finally, I'm going to end with NVIDIA. This has been, as you know, hugely in the news, huge climb since the breakout after earnings on May. And we can see that the climb initially was measured at a 756 to a cup and handle at 1158. So that's for roughly, 756 to 900, not 958. So 756 to 958 is 202 points. Added that was 1160 target. It came very close to the cup and handle target 1158, pulled back to 1069 and has been climbing even further. Now, where is the longer term, at least from this chart of NVIDIA, pattern for where it could be headed? Not too long term. From a near term, you could say, just looking at the bullish flag pattern here. The flagpole from 473 to 974 is 500 points. So that measured length of 500 points added from the breakout point near 960 plus the 500 is 1460. We know that NVIDIA has gone stock split as of end of market today. When people get their portfolio, for those that already own NVIDIA, they will see 10:1 stock split. So they will see for every share of NVIDIA that they had this week, they'll see 10 shares. However, the price will then be divided by 10. So NVIDIA closed today at 1,208.88. That's effectively a $120 stock when it opens Monday, unless it gaps significantly higher. But we are talking about split adjusted, that 1450 target is closer to 145, and that's realistically not a big deal at all. If NVIDIA opens next week near 120, having a $25 climb for a high momentum stock like NVIDIA is nothing. So there's a good chance NVIDIA could achieve that 145, 1450 target. After that, the technical target has been met near term. We have to see where it could be headed. So if anyone looking to short NVIDIA, going on the bearish side, trying to even hedge against the long portfolio, I would wait out for that 1450 or the 145 post-split level, and from there take an action if you want to sell covered calls against it, waiting for a pullback. And if the market does pull back, can expect to see NVIDIA pull back as well. So that's kind of where the NVIDIA's predicted target is. So with that, just wrap it up. We have FOMC on Wednesday. We have WWDC Apple's event on after the market close on Monday, and then we have NVIDIA stock split that goes into effect on Monday. So a lot of key cool things going on. We have to watch the 10-year yield, see if it breaks, continues its climb. If it breaks 4.7% and further breaks 5%, the market is going to sell off for sure. That said, there is folks who, like Tom Lee, who expects, he's from Fundstrat, he's the chief market strategist there. He expects Fed to be dovish, he expects CPI to be tame, and he expects a 5,500 target for S&P, which is not too bad. I mean, if you think about S&P closed near 53. Let's put S&P right here. I think it closed near 53.46. The high was 53.75. So 5,500 isn't much from where we are currently, and that's where he expects S&P to reach by June. But the measured long-term target by the S&P is somewhere near 5,700. So the climb could perhaps continue. We may not get any reasonable pullback and meet that 5,700 target on S&P and the $520 target on QQQ over the next couple of months. I mean, it's an election year. Market has been fairly bullish. Momentum has been bullish. But if 10-year yield continues its path higher, then of course the market will get a pullback, and maybe a 200-day moving average test might pan out, something for us to look into. Have a great week. Thanks for listening in.